Everyone, welcome to a quick Monday market update. Let's crack straight in. If you haven't seen already, our weekly newsletter was released last Thursday, and Tristan absolutely outdid himself with his fundamental analysis on SUI. I hope I said that right, but it is absolutely phenomenal. It's super in-depth. If you're not a subscriber to our weekly newsletter, you need to be. So each week we cover a different part of the markets. One week we cover the fundamental analysis of one major crypto, hopefully something relevant that you guys are all interested in. I think this absolutely takes the cake because it is a layer two, if I'm not mistaken, but it's slightly different to all the ones currently on the market. We also have a main story, a main theme, which happens at the start of each month. Then we also cover the market analysis, which I'm doing this week. I cannot wait. I'm going to cover what the Fed's doing, what the markets are telling us, and also some on-chain data. And at the end of the month, we have a top 10 portfolio. So that's the CCI portfolio, which we're constantly curating and having a look and putting it together in terms of what we think is a good coverage of different niches. So a good index, while also looking at risk. We'll also give you portfolio breakdowns and weightings. If you're interested in signing up to this newsletter, make sure to click the link that you see here underneath this video, and you can join up. All right, so I just wanted to pass that through. Now I wanted to touch on the crypto fear and greed index, because we're seeing this time and time again. Crypto sentiment is like a roller coaster. And I see all those people foaming on things like Pepe and Dogecoin and Shiba Inu, absolute wrong time in the markets, and then getting absolutely rinsed. It goes the same for Bitcoin, Ethereum, and Litecoin and other major cryptos as well. But I just want to just put you in that mode that, most people are buying close to or at 30,000 versus, here at 26,000 or 25,000. And likewise, when we were running up to that 200-week moving average earlier in the year, when we hit 25,000 and we had that big gut punch back to the 200-day moving average at 20,000, no one wanted to buy there. Everyone wanted to buy in the peak state. That is not how you approach this market. That is not how you become a sophisticated investor. So that's what I wanted to put across, because the crypto fear and greed index is a pretty good indicator when things get a bit overheated. We had a bit of greed last month. That's probably where we were, up in the 30,000, even though a lot of the technicals are sort of telling us that we're a bit overheated here, probably coming back, and we have. So that's great to see that play out. But I wanted to also point out the fear and greed index here, that it is telling us that the market is really in a bit of no man's land. And that's where I really think we are, coming out of the bear market phase into this new phase approaching the halving. It's where we want to be if we want to see, higher returns this year, which I think Bitcoin is going to do, based on a few macro factors, which we can get into another day, or if you read our newsletter. But we're hovering around the 50 mark, which is fantastic. And we're at 30,000, a little bit back here, but we're not getting into those areas of, those high greeds, those anything above 80, you really start to get concerned. And Joe and I make a point of all these, with quarterly sessions that we're doing and releasing our next one soon, which you have to watch, is that you can almost chart the entire Bitcoin crypto market just based on the crypto fear and greed index. When it's at these peak states in the 90, 80, high 80s, high 90s, that's when you really need to be shaving off risk in these markets. That's when you likely hear, you go to your gym, you hear some guys doing a set and they're talking about, Pepe or Dogecoin or what random low cap gem are they finding. Same with getting an Uber. You hear it, you see it maybe on the phones, on the dashboard, they're trading crypto, all that. That means the market's in a real peak state. You really have to think in the opposite of what the herd is doing, what the consensus is doing. Money is made in disagreements. That's when you want to be taking money out of the market, and you want to be buying the fear. And it is easy to say and easy to think about, but it is very, very difficult to actually action if you haven't got the right mental training and framework in place. That is what we're absolutely trying to do in our course, and it's what we do all the time in our mastermind group. So right now, what I'm sort of looking at, again, is we're in no man's land. We're in this perfect state where we've reloaded, we've come higher, we've had a few drawdowns, we're coming back, we're consolidating for that next wave higher. We haven't, we've got no conclusive evidence. We've had, that final move higher, and we're definitely not in these lows here. We're seeing that depression and whatnot that we're seeing down here in these lower concentrations. So really, really great spot for us to be in my view. Now let's get into Bitcoin, because I wanted to show you what gave us the heads up that this was going to fall down to a certain level. And that is when certain moving averages are breached on certain timeframes. Generally, markets have a history of doing something, and we can look back and then overlay it to where we are. So what we were noticing up here, when we were just having a lot of trouble breaching 30,000, there was no conclusive, bust up through, and I've got this trend line drawn here, but let's say 30,000 is around this point, along where my cursor is going here. We just kept making these lower highs, getting weaker and weaker. The RSI looked horrible, just bleeding out. But what we noticed over here is when the 50-day moving average, so this orange line that I've got, so the average, this is a line that represents the average of 50 of these candles that you see on the screen. Whenever that's breached, so the 21 was lost, the blue line, and then the 50, whenever the 50 and the 21 are both lost, we, in recent times at least, we come down and retest the 100. Now, when we lost it up here, see with this big circle I've got showing you right here that we lost them both essentially at the same time. It's a pretty good indication we're at least coming down to retest this, support area at 27,000. But more than likely, we're going to come down to the 100 again and touch it. And what did we do? We wicked all the way into it. Now, coincidentally, this lines up perfectly with the 200-week moving average as well. So this was an area which we were just watching religiously. If we really cracked down through 25,000, you really wanted to take some risk off because we're probably on the lower 20s. Look, we still might, but this, to me, this buy up, the way that the bulls are just acting here, it just feels like that was a pretty conclusive low. Again, we don't know anything for sure, but you're looking at momentum indicators. MACD is about to cross over. Stock RSI looks bottomed. RSI looks pretty good, sloping back up on the daily. So all of this looks pretty good. That said, we always want to wait for confirmation if we have an idea like this. And the confirmation is, what do you think this chart looks like here? So this line is pretty solid here. We'll hear this white line. We've had that bounce up from the 100 and the 200, but now we're coming up here and we're wicking into that. So it's almost this support, this previous support that we're whacking into is now resistance on the underside. I'm not confident at all with this move until we see, a couple of 4-hour closes and then a daily close, which might be a bit too late, above 27,100. Once we're above that, then you think we're starting to challenge again these moving averages on the top side. So that's exactly where we sit, guys. Any close, daily close, 4-hour closes beneath, 26,000, then I think we have to be very concerned that we're going lower. Likewise, with any close above 27,100, we close above that, we're going higher. And once we're, through this area in the triangle, the 100-week moving average is up here at 33,000. That's where I think we're going in the shorter to mid-term, but we're just going to have to work out this. Also, some macro issues around the debt ceiling and a few other points which we're monitoring, but the price action on the chart will tell us all essentially because it's trying to price it all in. Now, with the moving averages, I just wanted to point out that when this market, and what it's giving us pause right here in that we're not in a bull market, is that another great way of looking at moving averages and how you can sort of play it is visually. You can see that say down here, when we're in the lows here, the 21 and the 50 are at the bottom, the 200 sitting on top, the 100's there. What you ideally want to see is the moving averages stacked from, consecutive order from the lowest, to the highest. So what we want to see is the blue moving average above the 21, then we want to see the, the 50, then the 100, the 200. That's exactly what we're seeing here. But the 21's gone under the 50. So if the 21 crosses over again with the 50 here, it tells me that this is in a peak state of the market and we're moving higher. So that's just some thoughts around Bitcoin there, just some easy validation, invalidation levels. Just keep that in mind. That's how you play these charts. In my view, we did have the weekly close as well. Seems like we could, stop the bleeding here and move higher. So this is Litecoin, another chart which we're just looking at because of the relative strength here. I had some drawings there from our mastermind clients. See just the level of simplicity and detail, I'll probably say there, that we have on these charts in terms of how we plot our buy zones, because this was the fallback areas of Litecoin in terms of Fibonacci retracement. So 82 was a crucial level according to support. Next one down here was 75 according to Fibonacci and support as well. And we hit them all. We were talking about this in our videos previously. We smacked into them all. Now, what's great about Litecoin here is it's reclaimed its 200-day moving average. It blasted back through it. Also, this crucial level of 81. It came back down, retested again here at 81 as support, and now we're hitting the 21. So things are shaping up really, really nicely for Litecoin. And again, it's got the narrative of the halving coming out in August. I fully expect this to be higher. That's just my hypothesis, but of course, it's going to follow Bitcoin. When these moving averages start to curl up and this reclaims that 91 area here, she's off to the races, because all the cluster of resistance here is in this band, right while I'm circling here, where all this price action was off to the left-hand side. So you can see all the volume is on the right-hand side. You get above that 90 area and we start climbing up and reaching out of here. MACD crossing over, stock RSI looks really nice. RSI looks great there too. All right, let's touch on Ethereum just quickly. I'm less bullish on Ethereum than others, although I do admire the relative strength, and I have for quite some time. This price action looked relatively horrible. And then we did have the breakdown, that lower high there looks really, really ugly. And now we're falling through into these moving averages, which I still don't like. It would be lovely if Ethereum had, a deeper pullback, I think, just to really round out some of these lower levels and make sure that we've got everything covered. I mean, it did hit the 0.5 at the 100-day moving average. So that is really, really important. Now it's trying to bounce up through. If it can clear this level here, 1840, 1820, 1830, that kind of area, then it can really start to move in a similar move like this, get above that 21, bounce, and start to move higher out of this zone and forget about it. So that's what we want to see from Ethereum. But so far, it's been relatively muted, and you're seeing a lot more gains in other cryptos. Now, let's have a quick look at gold, because this will help us in the sense that Bitcoin has been following gold to a great degree, starting 2023, as that flight to safety, store of value narrative trade. So as long as these banks keep imploding and the US looks on the brink of a recession and whatnot, gold should get a steady bid, barring any black swan, flush, deep fall to the downside. But gold's strength here is really, really important. Now, I had a rising channel drawn here. I've gotten rid of it. We'll go back to horizontals because it is the best way to chart. It's just very, very simple. This top horizontal looks really, really strong to me in terms of it was this previous little peak up here. It's had this little drawback. It's finding support here, but it's clear to me that it is in this range. And what I like about this as well is it's above the 21, it's above the 50 and the 100 and 200. Lovely, and I love seeing moving averages stacked like that. Tells me that the crypto or whatever, a commodity, whatever we're looking at, is in a really good position, even for a platform higher or just building support. It's on top of the volume support on the right-hand side here. Gold is absolutely primed to move higher based on potentially what Powell says in another few days, but the macro situation is definitely pointing to higher gold prices, and in turn, it would be higher Bitcoin prices if it's following the same narrative, which I think it is. So monitor gold. If gold starts falling off a cliff, then Bitcoin likely gets hit. It's less about what the S&P 500 is doing at the moment, in my view, in terms of Bitcoin pricing. But for the rest of crypto, obviously it follows Bitcoin, but crypto is more broadly more risk based. So that's what I want everyone to start thinking about. That Bitcoin is thought of as that digital gold or gold 2.0. So it's going to follow gold in the situation that gold is actually seeing a use case and is getting a strong bid. So think of it in those terms. Guys, I hope you've enjoyed this episode. I hope you have a wonderful week. I'll be sharing my Talking Crypto Thinking Rich Mastermind session this coming Friday because Joe is actually busy. He's away. He's looking after the family. So I hope you look forward to that. It's going to be a little bit more advanced. I will try and bring it down a few notches, though, so you can get a full grasp of all the macro that's happening in the world that I'm looking at. So have a great day, guys. Bye.